Hi, welcome to Private Banking Advisory. Today I want to focus on the increasing tendency of investment advisors, fund managers, and private bankers to put their clients' money into so-called alternative investments. This is supposed to be a measure to reduce the negative impact of falling bond prices, low interest rates, and falling equity prices. Now, what are alternative investments? Alternative investments are private equity, hedge funds, investment in infrastructure, investment in property. One by one, these instruments should be explained in some brief detail. Private equity has had a stellar run during the last 20 or 30 years. It was a small cottage industry that started as venture capital investment. That means investment in new industries and new small businesses. Then it started to develop into acquisition of existing businesses. These acquisitions were then leveraged by a large amount of borrowed money. In effect, the so-called private equity industry became a leveraged speculation on the stock market trend. And as we all know, stock markets boomed from the mid-80s onwards. And it's no surprise that private equity therefore created stellar returns that were a magnitude larger than the returns from stock markets. But in hindsight, it should be absolutely clear that everybody could have achieved this with the simple expedient of buying shares on borrowed money, margin accounts. And you would have had the same result as the private equity industry. Hedge funds supposedly promise investment returns that are not dependent on the general trend of stock prices. To a large extent, however, most hedge funds were playing the long side of the stock market or the bond market. They didn't really hedge, and therefore their returns are also dependent on the general trend in stock prices or bond prices. Proper hedge funds would create steady returns whatever the market is doing, but these returns would obviously not look very good in the bull market, and therefore money doesn't really flow to this type of proper hedge funds. Next, we have infrastructure. This is basically a play on the requirement that we have in most economies of having better roads, better airports, better ports, better energy infrastructure. All these things should really be done by the governments and not by the private sector, and certainly not by speculative investors that are based million miles away from the country they invest in. Why should an investor based on the other side of the world have control of critical infrastructure like an airport that basically serves the community and shouldn't really be run on a profit basis, but basically on a basis of offering efficient service at the lowest possible cost to the community or the country. Lastly, we have the property market. Property, as we all know, is an interesting asset class as they don't make any more of it. So there is a natural shortage in the world, and Consequently, it's no surprise that property prices are rising continuously, especially in times when the money loses some of its value on an annual basis. Will this go on forever? We are basically at the peak of a property cycle. And as I said in the previous message, property prices can go down, even in the most prosperous economies. Switzerland is a good example. From the early 90s throughout the decade, residential property prices in Switzerland declined by an average of 30%. So I wouldn't say this is a prediction, but what goes up goes down. And therefore, all these so-called alternative investments have problems of their own. And on top of it, one problem is that they come with quite a substantial cost in terms of fees. Fees that are in many cases 2% or more per annum. If you add the fee that your investment advisor, private banker, or fund manager charges you for selecting these investments, you arrive at a total cost that can easily be 3% of your investment on an annual basis. So if you stay in these investments for, let's say, 5 years, you probably have already a cost hurdle of 15% before you even make any money. And any profit that you make has to be taxed and therefore will dwindle even further. If you get approached by your advisor and you are not sure what to do about alternative investments, I'm happy to advise you. I don't give investment advice. I don't help you select which investment vehicle you purchase or reject, but I can give you a general idea about the wisdom of investing in these assets.